All right, let's talk about permanent life insurance. I know it can feel super complicated, but honestly, it often boils down to one big choice. Today, we're going to cut through all that noise and compare two of the biggest options out there, whole life and universal life. And by the end of this, you're going to get the core trade-off here. Do you want the certainty of a guarantee or the power of flexibility? So let's start with a really heavy question. Just take a second and think about it. If you weren't here tomorrow, would the people you love be okay financially? It's tough to think about, I know, but it's the whole reason we're talking about this today. Because life insurance was created for one single purpose, to help you answer that question with a confident, resounding yes. At its very core, that's what life insurance is all about. It's a promise, a really simple contract actually. You make regular payments, and in return, the insurance company guarantees a financial safety net for the people you care about most if you're not around anymore. It's there to replace lost income, cover debts, and just protect your family's future. Okay, so as soon as you start looking into life insurance, you're gonna come to a fork in the road right away. You've got to choose between two main paths, term life and permanent life. So what's the actual difference? Well, think of term life like you're renting an apartment. It's more affordable and it covers you for a set period of time, like maybe 20 years. Permanent life, on the other hand, is more like owning a house. It's designed to cover you for your entire life and, this is super important, it builds a savings component called cash value over time. And it's this permanent path, the owning path, that we're going to dive into today. So let's kick things off with our first permanent option, whole life insurance. And listen, if you only remember one word for this policy, make it guarantee. You know, the best way to get your head around whole life is to think of it like a fixed-rate mortgage. You know exactly what your payment is every single month. You know exactly what the outcome is going to be, and there are absolutely no surprises. It is all about predictability and stability. And you can really see how that idea of certainty is just baked into every single feature. Your payments, they are locked in for life. They will never, ever go up. The payout to your family, guaranteed. Even the growth of your cash value is guaranteed at a minimum rate. This really makes it the ultimate set-it-and-forget-it option. You know exactly what you're getting from day one. But you know, those ironclad guarantees, they do come at a price. The biggest drawback is definitely the cost. You're paying a premium for all that predictability. And the other side of that coin is rigidity. Because everything is locked in, there's just not much room to adapt if your financial life takes a turn down the road. Okay, let's switch gears and talk about our second contender, universal life insurance. And if whole life is all about guarantees, well, universal life is pretty much its polar opposite. Its defining word is flexibility. So if whole life is that fixed rate mortgage we talked about, universal life is its adjustable rate cousin. It gives you the ability to make changes. But that flexibility means its performance isn't set in stone. It can be influenced by outside factors, like what interest rates are doing. And this flexibility is where universal life really shines. I mean, life isn't a straight line, right? Maybe you have a tight year financially and you need to lower your payment for a bit. You can do that. Or maybe you get a big bonus and want to pay more to build up your cash value faster. You can do that too. You can even adjust the death benefit itself as your family's needs change over time, which, wow, is an incredibly powerful feature. But here's the trade-off, and it's a big one. All that flexibility means the policy needs more of your attention. Since the growth of your cash value is tied to things like interest rates, a period of poor performance could mean your premiums aren't enough to cover the insurance costs. And this is the key risk. If that cash value gets all used up, the policy could actually lapse, and that could leave you with no coverage at all. Okay, so we've looked at them one by one. Now let's put them side by side to really drive home what sets them apart. This chart really just lays it all out there, doesn't it? It puts that core trade-off in sharp relief. Just look down the columns. For premiums, you've got fixed versus flexible. For the death benefit, it's guaranteed versus adjustable. And for cash value, you've got guaranteed growth versus growth that can fluctuate. It all comes back to that one central theme, the solid stability of whole life versus the adaptable flexibility of universal life. You know, this quote from our source material just says it all. It's so simple. When you strip everything else away, the decision really truly boils down to how much you value the certainty of a guarantee. Okay, so we've got all this info on the table. So what now? How do you actually make a choice? Let's break down how to decide which path might be the right one for you. Because this is the only question that really matters. It's not about which policy is better in some abstract sense. It's about which one is better aligned with your financial personality and your life goals. Let's make this super simple. Just ask yourself, do you want to know for sure that your costs will never change? Do you prefer a set it and forget it kind of approach where you don't have to constantly watch its performance? If you're nodding along, you're probably leaning towards whole life. On the other hand, do you expect your income or your needs to change over time? Do you want the power to adjust your payments or your coverage? If that sounds more like you, then universal life is probably the path you want to explore. And that's really what it all comes down to. When you're planning for the long haul for your financial future, which of these two things is more important to you right now? Is it the unbreakable promise of a guarantee, or is it the freedom that comes with having flexibility? Your answer to that one question is what will point you in the right direction.